what is the current market state with the taxation or tax process or withholding tax in the digital products? Because we all have experience, I don't know, opening an account Revolut or running different wallets application. But what about taxation? Is it really digitalized and built into the current processes?
Well, that's a fantastic question. We are still living in the Stone Age when it comes to taxes in the financial industry. So we see some digitalization efforts, and maybe we'll talk about that in a couple of minutes. But maybe taking a step back, we are talking about withholding taxes on dividend payments, interest payments. So when you have a dividend payment received, there is a foreign tax applied from the country of the issuer. And well, that as of today mostly is done in paper form. If you want to try to reclaim any taxes, to get a tax relief on the over withheld taxes, the basis for that usually is a double taxation treaty. So it's also a contract between two countries, so also paper based. So yeah, we're still living in the Stone Age.
I think it overlaps with the idea and product positioning for your product. So maybe can you tell us like how you position your product request tax and how does it work then?
So what we are providing is really a suite of modules that can save, first of all, a lot of efforts and knowledge and expertise because it comes with all the rules engines, the validation methods, etc. So you feed in the data, and then at the end, you get the proper documentation, additional documents that are needed to be sent to the foreign tax offices. So in essence, it is not only a workflow tool that guides you from A to Z through the process, but it also comes like a car with the proper motor, with the steering wheel, with everything. So the moment you have it, you can start driving.
It sounds like an end-to-end process. So instead of thinking, okay, I have the data, I have an agent that can analyze, I can actually make the decisions and actions on top of those data. And what do you think, like, from my experience, I haven't heard a lot about the products like that or business process in the banks. Usually, as a customer, I might overlap with a taxation process as a part of freezing my incoming transaction and asking additional information. That's the most interaction that usually customers see. And why do you think it's running like that? Are we not putting in a lot of efforts into the technical implementation, or it's not so important?
First of all, it's not only about technology, it's also about financial education. And I call it tax literacy, that people know that they can get a tax relief. And then they ask maybe a tax advisor or their bank. And what banks usually do, at least what we see with tier 2 to tier 3 banks, so mid-sized to smaller banks, is they don't even provide that service today to their end clients. Or maybe they're provided only to institutional clients and some wealthy management investors that can afford also the fees that come with such a service. So before we even look at the technology, it's about where can I get that knowledge, that expertise, and who is helping and supporting me in that service? Is it the bank? Is it a tax advisor? Is it an independent firm? But only then can we talk about technology. Who is using the technology and how are they using it? And what we have seen over the last couple of years, and I started more than 25 years ago in banking, tax was not even a topic at the time, to be honest. But in recent years, we saw some movement also from the authority side. So some of them in Europe go digital now, or try at least. But it's only some efforts. It's not widely spread. And a lot of investors in the European Union don't get any service at all.
Why do you think the reason like that? Okay, we understood that it's not technology. There was no technology, now we have technology, but nothing changed. And you said that usually like a small or digital banks, they're not looking to have this service built in. What is the reason for that? Why do you think?
So historically, tax was only always just a compliance issue. So when we look back, we know the US qualified intermediary system from the United States of America. Then we also have FATCA. Everyone has heard about FATCA. We have the common reporting standard that everyone needs just to adhere to. So tax was always just an exercise to be compliant. That's why it always was just cost center. So somebody wanted to sleep well at night, usually the head of tax or a head of compliance, and that was it. But it was never in the minds of the banks to have a proper service, to create value for the end client in the tax sphere. And that is now slightly changing over time.
Before jumping into the more details, like what is fatwa? Because I know what is the term, but I'm not sure if everyone who's listening is aware. So can you give a little bit description? What is it?
I think it was implemented in the 2013, 2012, around that time, by President Obama, and has one single purpose at the end: finding out where US citizens are on this planet that are holding US assets. In Behind that, of course, is the reasoning: we want to avoid tax evasion, tax abuse. So it's at the end just a compliance program to find all US citizens around the globe that are invested in US assets. And you need to report as a financial institution to your local governments that then submit that data to the US authorities.
So it's basically an engine which is pulling information globally from different countries and have the agreement, let's say, with those countries to find out what are the assets and holdings from U.S. American citizenship. Because in the world there are only two countries which are always you are a tax resident, even despite of living and being more than 186 days abroad. That's United States and Israel, which means they have to have a special instrument. And is there anything similar in the European Union? Because okay, we have a protocol or framework which United States are using. Do we have anything similar in the European Union?
That is the common reporting standard that was implemented a few years back. And there you also have contracts between the individual countries, and then they share the information on the end investors. Let's say I'm Swiss person investing in France. And so if I do that, then the French authorities would know that I invested in France.
The last thing about the frameworks, I heard that they're not really compliant because usually there are some countries which are saying, okay, we're implementing FATFA, and then some European, and then not like really combining two together. Is it still a thing, or it's changed?
Yeah, I mean, it is true to a certain extent, and that not everybody accepted FATCA or CRS. If you look at some Asian countries, they just didn't care. And of course, it's still up then to the financial institution that serves the end investor to file that report. If they fail to do so, for whatever reason, then the authorities don't get the information they wanted from the beginning.
Okay. So now we have the atoms and we can build more complex logic. So in this case, I understand that historically, how actually a large organization they are saying, okay, there are minimum requirements that we need to run, and actually it's eating the budget. Like to have people who are doing all the checks for the taxation and then sending this information, and even maybe doing something on top of that. That's a cost center. And from what I understand, with the innovations and technology that we have right now, you can flip it and make it business center so it can generate the revenue. So, do you have some examples when it worked like that?
It definitely works. We know that from experience. And it's simple logic at the end. If you automate a process, it's not only about becoming more efficient and maybe scaling up. It's also about you need less expertise, less knowledge, because the engine can do a lot on your behalf. So automation means many, many things, and you can think about the process end to end. So in the ideal world, the end investor would only be touched once in the beginning when he signs up for the service, and then the customer journey is just perfect because we don't reach out anymore to the customer because everything is digitalized as much as we can. And still there might be paper, but that is shipped back and forth by the financial institution. But for the customer journey, everything is smooth, and you have the full view on the end-to-end process. You have statuses, etc. When is the paper form with the authorities or with the custody network, etc. And then, of course, if you are able to do that, like automating it, digitizing it, you can scale up. With what that means at the end is we all know that you can get down the cost per unit, which then means for the investor, I have a lower threshold if you reduce the pricing for the service. So that way, a lot more customers can get the service now. And that really changes the game. So for the bank, for the financial institution, you can create a new revenue stream. You actively sell a proper service. You have super good customer retention and happy clients because they get money back, maybe sometimes years back. And that can be done all by digitalizing that service using proper software that automates as much as you can.
So basically, with the technology, and that's maybe the focus that right now AI is putting there on the market. Like you can do the things that you could not do before, and those things will be much more efficient compared to the previous process. And it sounds like this process, but from the customer perspective, is it more for individuals or businesses? Because maybe due to volume and once again operational unit, like we do the integration, we do information polling, and then we're starting to automate this process. Is it more something that business customers will have benefits, or the individuals from your experience?
Historically, it was served by financial institution usually only to institutional investors like pension funds, insurance companies, investment funds. They were highly benefited from such services. They even benefited from a relief at source opportunity, which means you hand in all the information before the dividend payment is paid out. And that way you already get it at source. So on dividend payment, a reduced tax rate that is super important for large institutional investors from a cash flow perspective. And then, as a second leg of your customer base, you could usually serve as a wealth management client. So really high net worth individuals that have large volumes, big portfolios, they got the service. But now this is also changing. We actually have clients that are serving that service even to their end clients and end client base in their online banking, which means every single small investor can opt for it. And so that is really then scaling up business. It's also having happy clients.
How we usually interacted with the high net worth or premium customers. Usually it's a premium branch which have special managers, special embedded services. But with all the shift into the digital world, like the same application, I don't know, you take the digital bank and you're onboarding into the same application. There is no two applications for the premium customers and the regular one.
No,
The application is usually split in with the services, and actually even the ability to become premium, like with the metal cards or with the different tiers, it's still just the clicks for the subscription or something. So the logic that I think is important here, we're not longer like a splitting or fragmenting our customers by some kind of internal rules. They have an ability quite actively influence to which basket we're putting. Is it premium or not? I'm buying this service or not. So it means that on our digital systems or the core banking that we're using, it should be much more flexible because we have better ways how we're even the customer is influenced which category it goes. That's really great insight, Roman. Thank you for this takeaway. And I'm jumping into the more contextual question because in this case, okay, we understand that it's process that existed. It was heavily like a paper driven. It was for the premium customer, institutional one, and then for the high net worth. But is the business around the world is changing? Because in one way I would say last for 25 years we saw a dramatical integration globalization. Like it, it's possible right now to have a private jet, I don't know, running from one European country to another as Uber. Literally, there are applications where you can book for a couple of $1,000 and then have a private jet, which was not possible 25 years ago. And does it mean that globalization changed? Because a few years, I would say we have a few years back, we started to face that world started to close the borders. Like everyone is in politics, they're saying that we need to protect the local market, immigrants, which once again is a potential issue for the withholding taxation and all those digitalization. Because if people are not migrating, they're not investing in other countries, it might be an issue. So from your professional perspective, what is the current trend and how it's in a global way and strategic way changed for the last 25 years?
I believe that it is changing to the better. So more investors investing cross-border, so in assets around the globe, and that is encouraged by the governments, especially in Europe. So even the EU Commission recognized that it is also a threat to the capital market union of the EU if we don't get more inflow of investments from outside of the EU and also in the EU. That, for example, German investors usually they had a home bias. They mainly invested in German assets, but now they are starting to invest in France, in Belgium, or in Swedish assets. And that is really something the EU Commission encourages. And we see that also with our existing clients that banks tend to sell more products that are investing in other locations than their own home base. And I think that is really good, first of all. But of course, that creates more complexity than for the withholding tax service, because then you end up not only with all the domiciles of your investors, but also with a bigger matrix of investment countries where you need to know the rules, the procedures, the processes, maybe the responsible parties to be involved, etc. But yes, I see movement there that we go more globally, that investors are encouraged also when it comes to your retirement plans. Let's look at that. In many European countries, you have your proper retirement plans from the government, etc. But people recognize, I think it's a good idea to also invest on my own, to have savings later on. And as savings accounts with the interest rates today, maybe not the best idea. Let's try to invest in funds, in single assets like a share or like a bond. And I think that is changing, which is good also for the industry.
Unification in the European Union is driving because, like, let's go back into the history. Euro started to be as a digital settlement just 25, 26 years ago, and then as a currency that we can have as a cash not even more than 25. So
Yeah.
we have a lot of unification there. But another question which I think is important, like, was the European Union affected by Brexit? Because we have cases when we have unification. And what do you think? Is this process, like, Brexit helped European Union or vice versa? What is your opinion here?
That is a political question, right?
Yeah, but it gives an
Yeah,
insight because, like,
yes.
if we are living in a unified economical zone, that's one thing
Mhm.
because we know that German people can invest in France and France can invest, I don't know, into Hungary, where I'm right now. That's a process that we face. But when someone say, "Okay, I'm no longer the part of this process," is it
Mhm.
coming better? Is it affecting the whole tax withholding process from the product perspective, not political one, but
Yes, yeah, and I think that that's a very good question, because what are now the UK, let's say UK government is doing when looking at what is happening in the EU. Let me take a step back here and explain something what we'll see in the future, because the EU Commission recognized also in the withholding tax sphere that something needs to be done. Huh? So strengthening the capital market union, fighting against tax abuse, tax fraud, but also having a lot of cross-border investments and inflow of capital. So they are looking at, it is called EU Faster Directive, and that comes into force in 2030. So everyone is already preparing now. So until end of 2028, the individual member states of the European community will have to adapt to these rules, to their local laws, etc. So a lot of is happening right now. What I have seen, I've not spoken to the HMRC in London yet, but I know from Switzerland, where I am based, and we are also not in the EU and never have been, and probably never will be. We never know. But even here, there is a working group already on tax authorities level, together with the industry, looking at this EU Faster Directive, because of course that has an impact on investors from Switzerland, as well as investors from the US or the UK that are not part of the European community. So, what do we do next in Switzerland? Will we adapt it somehow? Will we talk to the EU Commission? So, that for sure will have an impact, Igor. Yes, and I think the British government, the British tax authorities will also think about what is happening in other countries, in other regions, when it comes to investments, and how does that affect my own investors and the investments into my assets in my country.
maybe the trigger for asking this question from my side, like, we do weekly harvest, and usually there are a lot of news how companies are making decision to go IPO in United Kingdom. And in the end of the day, they're choosing the double listing in United States and United Kingdom, or even not doing the listing in United Kingdom. So it shows that there is some kind of trust or procedure issue with the listing and taxation for investments. Because one of the item, and correct me here if I'm wrong, I hope you have more visibility. Usually in United Kingdom, if you get investing or options in a startup, you have to pay taxes in advance. So basically you have a promise that you will have money sometime because you are working hard and the startup is growing. But the HMRC is saying, okay, you have something really nice for us. So you have to pay money right now as a taxation, which is quite a big number, more than 20%. And it kind of makes it a little bit harder compared to other countries because you didn't get the money physically. You didn't have anything except just the promise. And do you think it's kind of also blocking people or limiting their willingness to invest and deal with this kind of wealth management?
I cannot confirm nor deny that, but of course it's a constraint, right? It's a constraint. So for sure, it makes sense if you are starting a fintech to look at your overall regulatory framework that includes taxes. So look at that first. Why do a lot of fintechs start in the Baltic countries now? Because obviously, in the environment there is different, also from a tax perspective. Why do big corporates have maybe, like I recently read that Nike, the swoosh, from Nike, that is the property of a company, a daughter company, I think in Ireland. So whenever
Hmm.
there is a Nike shoe sold somewhere, they need to pay a license fee in Ireland. Why is that? Just for tax purposes. And I think that is also what fintechs and regtechs should look at. Where do I have the best benefits also in the tax system? Absolutely true.
That's absolutely complex topic because I remember the story with the Apple and custom taxation rate for the Apple being in Ireland,
Yeah.
selling in European Union, and then it was a lot of buzz like why
Mhm.
actually one country can customize the taxation for the specific country by having billions dollars or billion euros as turned around and cutting costs down on taxation on top of that. That's it's really deep topic, and I would say that there is no enough like a proper and well aligned and well checked information. And the question you highlighted Switzerland. I specifically didn't ask before UK because yes, Switzerland is not part of the European Union, and it's a sweet spot being in European Union, covered with other European countries, being kind of in really nice place with the nice possibilities from the capital and the skill and the knowledge. I think it makes a unique place. Is it the reason why your startup is actually from Switzerland? That's a like the place where those knowledge and taxation can be born, or anything other influences this decision to start the company?
To be honest, no, the company was founded more than 26 years ago in
Yeah.
Rosenheim, close to Munich in Germany.
Oh,
So I'm
oh,
just
nice.
leading the Swiss branch of it, but it was founded in Bavaria. So really German engineering company, software engineering. Yeah.
Okay, then it makes perfect sense. So in this case, aligning complex processes with the German engineering, because I got this from wrong idea. So sorry about that. And in this case, like we understand, where I got the understanding that there is a product which can be bought and integrated by large organizations who would like to serve institutionalized services to institutionalized companies or customers, and then to wealth management, pension funds, government like entities like that. And we see the trend in personal banking. Is there anything future prediction that you will say, okay, it's going to be something that will exist in taxation, tax withholding, or even, as you said, compliance, just to make sure that we can continue running as a digital service in 5, 10 years upcoming, like anything that you see in trends in this area?
With the EU directive faster, I think the trend is there, and will not only affect the big banks and the big financial institution with their wealthy clients. So the idea behind that is really also reaching out to small investors, and we with our software we even serve small private banks that only have 80, 90 employees. So you can imagine how many end clients they have. They don't have like tens of thousands of end clients, but still they use a software to cope with this service to provide a digital experience to their end clients.
We see a big shift into the crypto and stable coins. And before that, I would say one of the function for money, like a store value, was in wealth management. So if I would like to keep my money and then make sure that I'm not losing anything, that it usually bonds or some kind of wealth management that I will use. And before that, crypto was really not the place to do the wealth management because it was a lot of volatility, all those pumps and drops. It just hurting rather than helping to store the value. But with the stable coin, it seems that it evolves really fast. One of the functions that we never thought, actually, it's a fiat function, like a transaction value. How easily I can send the different currencies is usually it comes with the nature with the European currency, euro and dollars, because it's freely converted. You can buy on any markets. No one is limiting, because if you take a look on China currency or other countries, or even India rupees, like you cannot sell and buy it freely. So do you think there is a shift how we're going to invest, because it's connected with this topic with the cryptocurrencies and especially stable coins? Is it shifting the market this way?
I don't make any predictions, but what I see in the industry is that more and more banks provide such products or sell those products, and that means something. So because historically, few years, if you look a few years back, banks didn't touch that, not at all, right? And now that is also changing. So it is served and sold to many more customers. And that we also see that in Switzerland, and you may have heard of the crypto valley close to Zug. So in Zug, there is really a home base for a lot of crypto companies. And when you look at the tax piece of it, I mean, there are countries that then tax you if you sell the cryptos after 1 year or even after 6 months. You get taxed, or sometimes there is not even a ruling. And then we also had from OECD the CARF, but now it was postponed. It should have been tax reporting on crypto assets. So then you have maybe withholding tax on the staking of crypto assets, and potentially you could also reclaim that. So if you get, like in Germany, 25% plus church tax, etc., it's 26 something percent on a crypto asset if you stake it, and then maybe you sit in a different country, you even can reclaim that. But I haven't seen it yet. But for sure it will come. So yes, I think there will be more investments, and banks are selling it even more because they also recognize it makes sense and the investors want to have it. On the other hand, we see much more regulation around it. I believe that is also important, that we see more regulation, that it is not like the Wild West. And on the other hand, in my niche, you see a lot more tax regulations around it, tax reporting, etc.
Ironing out of the legislation is happening because if you take a look on the crypto 10 years it was a wild west. Right now there are KYT rules like a travel your transaction, know your transaction. There are a lot of requirements how to onboard and open accounts. Even with the simple process submitting the crypto exchange or crypto wallet into the Apple Store and Google Play became quite hard because they rechecking the licenses, they limiting availability. So it's not like it used to be. Like I have an application and then do whatever you want. But that's interesting takeaway, and thank you for that because you are highlighting that right now it's not really critical how we deal with investment. And even right now we do with the wealth management, with the bonds, ETFs, and other instruments. Definitely is going to be the day when we acknowledge and we will accept an ability with the stable coins because it's already happening. And the game from the big banks, because everyone is aware, JP Morgan is issuing tokens, deposit tokens, cross-border tokens. And that's a question, I think, when we will see in real wealth management the usage of different tokens and ability to then reclaim and withhold the tax using those tokens.
These are good examples in the crypto sphere, but also the EU FASTA directive in the regular business, that regulation can also change perception of asset types, can also shift investments, because what we were going to see under EU FASTA, coming back to the tax piece maybe quickly, what we're going to see is, as it is planned to have much more digitalization in the field, and we even introduced then electronic tax certificates in the adopting member countries of the EU. So the experience of digitalization is much better than today. And today, for example, in Italy, if you try to reclaim in Italy, it takes up 10 years or even more to get the funds back. But in future,
Wow.
you would get the money back immediately. So will that influence somehow and have an impact on the investment decision? For sure. Because yes, exactly. So countries that are not so attractive from a tax perspective today, they become attractive in the future, because I mean, Italy is a big country from an economic perspective. They have large companies, but from a tax perspective, it was a nightmare so far. But that's going to change. Same for a lot of other countries in the European Union, that with the help of regulations change the investment behavior in future. And I absolutely love that, because usually tax is just a burden, and now we are a facilitator for investments.
But that's what I really like about like last 20, 30 years. We educated ourselves that the things that we saw as limits and borders, they become something that you benefit from. So my saying is the limitation is usually the drive of innovations. Like if you don't have an ability to do something and you have limited resources, then the only way to do it better, innovate and become smarter with the usage of those resources. So I think we're kind of facing the same in taxation.
As you know, Igor, I'm visiting a lot of conferences. I'm visiting a lot of clients, friends across the EU. And what I often find is they haven't even heard about withholding tax service. So in just a few countries, it's already a standard service. Like in Germany or Switzerland, it's the standard service. But try to get that service in other countries. It's super difficult to even get the people in a room that have ever looked at that topic. So for me, it's all about education first, and then technology comes in. Because if the people don't understand that they might have a problem or a challenge, and that they could create value for themselves and their clients, you don't sell any software, and they would never use any piece of software. So it's all about tax literacy. And I would love to see that more and more also on the investor side and also on the financial institution side.
Education is corner topic because that's even the reason why the podcast exists. There is a lot of information, but really taken care and curated coming from the real experience. It's not so many sources. In this case, we are almost in the end of the episode, and usually I'm trying to ask the last question this way. So, Roman, what is the question that I didn't ask today?
Why is it so expensive today to have a proper tax service?
I asked, but if we would like to put something to our listeners that they didn't hear before in this episode, so what it would be, maybe some suggestion or something that you would like to share with us.
Yeah, first of all, I always would start with reflecting on my status quo. What am I doing? How am I doing it? And why am I doing it? And probably I just use paper. I'm not well informed. I do everything manually. I can't scale it up, etc. So it's just a cost burden. And then I have a very high pricing. The clients don't love it. They have not a proper customer journey across this service. And then it's just a mess. And it gets more and more expensive because there's more regulation. I need to add it up to my expertise, to my people, etc. So if I don't reflect and have a view on what is ahead, what could I do, then I will never be able to have a proper service, a proper customer journey, a proper pricing, and value for my company.
And I think it's not even about taxation. It's a lot of business processes. If you do try it, if it's well suited for the customer and it brings a lot of value, the customer will love it and will buy it. So that's the way how we do a lot of individual services.